Today is March 24th, 3:18 p.m. We are looking at Activision Blizzard, and it had rallied today at 5.8%. It went up to 85 at its highest. You see this large gap up, rallied. Um, ATVI is the ticker, and here we are. What is going on? Today there was news about how the case with Microsoft and Activision, the regulators are showing some positive signs, and um, that's why it rallied. And so the question is it going to continue to go up or down from here? It's a big gap up here. So this whole gap here, is it what's going to happen? Well, let's take a look because we saw something very unusual on the options tape with this. So you see all these 35,000 contracts here, and then there's 25,000 also. So these are very unusual to us because it's also the same trader, the same large institutional investor. Well, it may not even be a short-term trader. It could be a long-term investor, because if you look at the date of these expiration dates, they're in January 2024, and they're quite interesting to us. So even if you are a long-term investor, you can use these unusual options to decide what kind of long-term investments you want to take, because this is about 300 days out. And so let's take a look at the options chain. So here it is. It's 300 days away, and you'll see we also have our position set on the same strike prices. This is the 85 strike price, and the 75. You'll see the volume very high currently, 96,000 and 95,000 here. And so our position here is that we bought the 85s and we sold the 75s. So what does that mean? Well, we take a look at the analysis here. So this is it. This is the trade here where you're buying the 85, selling the 75. And so it is profitable as it moves down from its current price from 84. So as it goes down in price, it is profitable. You'll see here the profit and loss line. And so this is a long-term short position. So we believe this large institution believes that it will be going back down, and you'll see here the number of trades here. So this is done at the same time. So let's take a look at the number of contracts. These are set now. That's 70,000 of them, and then now there's 95,000 of them. So and each of these cost close to about $300 each. You'll see if they bought it and then they sold it. So even here in the analysis, although it shows this amount, if you take a look at the price they buy at and then they sell it at, it's a difference of about $3, which is about $300. So if you multiply that $300 times 95,000 contracts, this required at least $28.5 million to put on this contract. So this is a very large institution who we believe thinks that this major jump today is not going to hold. But long-term wise, they don't know how long it'll be. But it could also be one of their hedges, because they may own a lot of shares of Blizzard, and they're hedging that in case it does drop from the 85 point. But we believe that there is a good chance that it will be dropping down sometime in the long run. So keep that in mind. It's 300 days out. So this is not a short-term trade. Keep that in mind. So this is for long-term investors. Okay, so if you like this analysis, subscribe, hit the bell icon, and you'll get notified whenever we see these unusual options. Take care and good luck trading and investing.